Hey everybody, welcome back to another video. Hope you guys had a great Saturday. Hope you guys had a great 4th of July. I'm coming to you with another video talking about a partial milestone that I hit. So some of you may or may not be aware, but basically my current goal for the short term is to get my dividend income to about $1,000 a month on an average basis. With that said, this year I'm aiming about $700 or so a month. And you can see in this 2019 bar here, I'm relatively close to that. Obviously, we're only halfway through the year, so anything can happen, dividend cuts, what have you. But just forecasting out for the rest of the year, looking at about $732 in dividends. But the real reason why I'm here is because we hit another milestone in the portfolio. And if you look on a 12-month basis, obviously these dividend stocks, they generally pay on a quarterly, monthly, or sometimes semi-annual or annual basis. And what ends up happening is I track everything on an annual basis. So if that stock were to be held for the next 12 months, what sort of income would I get from that? And that's generally what you measure in this 2020 income. So, you know, if you're looking at 2020 or you're looking at, you know, just in general what I track what the annual dividend payout is, that's generally what you're seeing. And with that, over the most recent few months, with some investments that I've had, just continuing to invest, you know, $40,000, $50,000 over the past first half of the year. I was luckily able to get that up to over $800 a month. So close to $9,600, $9,700 or so to be exact. Forward income is expected in 2020, which is absolutely phenomenal. I was hoping by very, very far stretch of the mind to be able to get that income in 2019. But there's about a $70 or so discrepancy at the moment, and hey, it is what it is. I did meet my 2019 actual goal, which was $8,500 or so in dividends, which was, you know, we're up to almost $8,800 now in terms of dividends. And by the way, these numbers don't include any sort of income that I get from YouTube or anything like that. This is strictly coming from some of the real estate portfolio and also the dividend stocks that I own. I don't own any individual like single family homes or anything like that, but more private real estate investment trusts and like Cardone Capital and stuff like that. But relatively excited about where we are in terms of the portfolio and where we've gotten to thus far. Like I said, $811 on average per month, which is pretty good. The goal for next year, though, is getting this up almost by another $190, so $1,000 per month, which will be a stretch of a goal, but it's only about a 20 to 25% increase from where I'm at now, so not too drastic of an increase from there. But the one cool thing that I was thinking about, and I'm definitely going to make this a different video because I think there's some calculations involved, but I was watching a very inspiring video by Cardone, and not specifically about his real estate portfolio, but just listening to him in general about, you know, what you should be aiming for in terms of where you want to be in your life, whether it's early retirement or what kind of income goals or what have you. And he was thinking, you know, obviously he talks about the 10x rule a lot, but that's not really what I'm going to get into. But I was basically trying to look at, okay, once I get to the short-term goals, which at the moment is $1,000 a month in dividend income, what's next? What's after that? What's really like my midterm goal, right? Because there's obviously like the Matt would be happy, like, and never want to work another day in his life goal, which is magnitudes away from where I am at the moment. But there's kind of this intermediate goal that is in reach and something that I'm looking forward to. So I'm going to make another video about that, but it got me starting to think, you know, how much is this on a daily basis, right? This $811 or so on a daily basis. And it's about $26, $27. And so, like, again, this doesn't include 401k, this doesn't include YouTube income, which would make this go up. And that's something I might start counting in the future is, you know, potential income from those. But strictly looking at dividend income and strictly passive income, $26 to $27 a day. That's not horrible, but it's not great. If you think about it, you know, my phone bill, it takes about 4 days for this daily passive income, you know, to pay off. And another cool thing is I don't need to work for this, right? I mean, as long as the dividends keep coming in and the companies don't cut it, every single day, Saturdays, Sundays as well. This isn't counting 5 days a week. This is counting every day of the month. Around $26, $27 will be coming in. And another cool thing is once I actually do get it to about $1,000 a month, that'll be close to about $33 every single day, which is pretty cool. Think about it. This could pay, if you wait 2 days, that's a nice dinner out at, a semi-decent restaurant. Is it, Capital Grill or anything like that? No, but you start thinking, these are extra days, or some people put it, who puts it this way? Basically, it's working hours that you no longer have to work. Like if I were to say I make $20 an hour, this essentially is buying an hour and a quarter of my day every single day, right? And that means that, I no longer have to work, 400 or so hours every single year based off the fact that I'm getting this income, which is a really interesting way to think about it, because in actuality, that's what you're thinking about. But another thing that other people have kind of thought about, and not saying that this guy is, the be-all, end-all, and you should listen to him either, but there is some people that kind of put time, way too much time, value of money, meaning like, oh, well, I make, $20 an hour, and if I only made $20 an hour, there's no way I'd be able to live. Well, it's like, well, you're only counting the $20 an hour for the 8 hours that you're working. If you're making $20 an hour, every day, you're not limiting yourself to that 2,000 hours that a full-time employee makes, and you're actually counting the other days where you're sleeping and the days that you're, Saturdays and Sundays where you're not normally working. $20 an hour is going to make you a crap ton of money. If you think about it, 20 times 24 for 24 hours in a day, times 7 times 52, and you end up making about $174,000 a year. So it's another way to look at it. I think a lot of people nowadays, they always think about, things in terms of what a full-time employee and 2,080 hours is full-time and what have you. But at the end of the day, what you're really trying to figure out, and this is kind of another video sort of topic that I want to get into, is how much do you actually need to survive a day? Is it $100? Is it $200? Is it $500? Is it $2,000? I mean, if you had that sort of income, that's basically what you should start scheduling your portfolio off of. And if you're able to achieve 2% returns, and that's what you're comfortable with, then you start to realize, well, I need $1,000 a day approximately, and I can only handle 2% dividend rate. Then you're going to need a crap ton of capital, right? Obviously, 2%, of $1,000 a day, you're going to need, a huge chunk of change. I'm not going to do it here because that's a different topic for a different video, but that's really how you can start understanding where your intermediate sort of goals are, right? And that's what would make you happy. Then there's the point where, the long-term goal is potentially FU money, right? Like, never have to work again, really start getting into things that you truly care about, like, philanthropy, if that's something you're into, starting up a barbecue restaurant if you're into that, or before I sign off, kind of show you what the sector weight and sector weight percentage and the sector weight income are. As you can already see, this table, it's kind of a mess. There's 14 or 15 different columns and rows, so it starts to get a little crazy. What I'll do is I'll scroll over to the sector weight percentage and the sector weight income by each individual sector. So as you guys are well aware, the key starts at, say, 12 midnight and goes all the way around until it reaches back at 12 midnight again, starting with consumer staples and discretionary all the way down to ETFs. So you can see, as always, the largest portion of the portfolio in terms of weight percentage and income is still energy, and followed by real estate and financials relatively close behind. Consumer staples are starting to get a little bit bigger as well. And the one that has the largest discrepancy in terms of weight percentage and income is information technology. So obviously it's about 6% of the actual portfolio, but it's only about 0.4% in the terms of total income. And that's because a decent amount of companies that I invest in for IT, such as like First Solar, Google, those guys don't really pay a dividend. And if I invested in something like semiconductors or Microsoft, it might be something a little bit more, income providing. But this is kind of a portion of the portfolio that I'm not relying too heavily on income, because I have other, portions of the portfolio that supply plenty of income at the moment. Average current yield of the portfolio is about 4.7. Yield on cost of the portfolio is about 6%, which is pretty crazy thinking about it. The yield on cost of the portfolio, so the money I've invested in the past, is currently yielding about 6%, which is pretty wild. I hope all the money that I invest ends up being 6%. I think that would be absolutely phenomenal. But yeah, that's relatively it. Another thing that I have been thinking about is the really different pillars of wealth that some people might call it, whether that's owning a business, real estate, stocks. And I do get involved in real estate somewhat with my real estate investment trusts, and you can see it's about 17-18% of my portfolio. But one of the things I've always teased is, should I invest in physical real estate? A lot of people in the comment section question why I don't invest in physical real estate. And I sort of do. If you think about it, I have my Cardone capital, which is technically under real estate, and some other things as well. But yeah, I've contemplated it because there is the depreciation aspect of things, and there's also the equity build that I don't necessarily get investing in stocks or real estate investment trusts. So, it's something that I've thought about in the past, whether I actually lower this real estate investment trust portion of the portfolio and strictly start investing into more physical real estate to get a little bit away from the stock market. Not that I dislike the stock market, but it's something that's a little bit more longer term. But then again, with the money that I'm currently dealing with, it's generally minorly below what I would want to do in real estate, which is more along commercial real estate, so 5-unit plus sort of multifamily homes or shopping malls or triple net real estate. So until I get this portion of the portfolio to a decently significant value, maybe 3 times the size it is currently, so closer to about 6-figure range, I wouldn't necessarily think too much about jumping into a large deal. However, I have also thought about single-family real estate, and technically this amount of money could buy me 1 or 2 small homes in the Texas area, especially on the outskirts of town. But anyway, going down sort of a rat hole here, but really enjoying where the portfolio is getting off to. $800 a month in dividend income, not including 401k, not including my YouTube income. Really great start. Still 6 months to go to 2020, so hopefully I'll be able to get up to the 900 or so range before 2020 even begins. And then obviously 2020, I'm hoping to get this number above $1,000 a month. So really excited where I'm at. $2,200 away in 2020 income from my goal, which is about a 26% increase. So, whew, crazy. Definitely has built a lot faster than I thought. You could start seeing this income by year, or income by month rather, starting to go and exponentially increase compared to where I started from. So relatively crazy, and excited to provide you guys with the update. Any questions, comments, leave them down below. I will talk to you guys soon on another video. Have a great rest of your Sunday.